hear me? That will be the question. Let's take a look at the microphone connected correctly. Fine. Alright, so this program up here, we got a couple things going on at the spot. We're showing both just two levels of the ES. And what it is we have one with the Fibonacci retrace program on it, and this one with my adaptive trend model. And the one up here shows an alternative one, a trend plot one, and if we disable that one, we can add the standardized new trend model, which would look pretty close to the same. Now, these become different when you move into smaller time frames, and why not just go ahead and put a smaller time frame in there that happens to have one. I need a 1000 tick chart. Here's one of them. And this one has the adaptive, and I should have another ES 1000 right here, and this has the original. And we can put them one underneath each other to show the differences. Just like that. Alright, so that matches up the date, time, and see, here's the significance of it is you can see the trend change color between one and the other. I can't do that with putting the line on there, but you can just see it visually from here where we get the same catfish signal and extreme fractal by the trend turns green on the adaptive, and it's going to work on the smaller time frames more so than you're going to notice on daily. In that it's only going to be significant if you're in a like deep red trend. It's going to turn green sooner, and you can see also from a couple of days ago where still red over here, and you can see the new adaptive one turned green as it began to recognize that conditions became oversold. So subtle difference there. You can see the live trade that we set up right here from the ES setup there. A little bit different configuration as far as inputs, but we did that one live for everybody. But let's go back to the Fibonacci, and it's an interesting program because this was the first work I did on understanding trend and how to relate it with regard to Fibonacci, because what I wanted to show was, okay, fine, everyone uses Fibonacci, therefore Fibonacci must be valid under all circumstances, and it just isn't the case. And so let me disable, let's just remove this entire SPI. Alright, so we'll take out that ES and we'll go back to just a single chart, and that way you can see it a little bit more effectively. And what I did with this program, to give you a little bit of a sense of it, we can go to the inputs, but the concept is that we wanted to continue moving price with the highest high of a set period, the lowest low, and that would become our comparison for a Fibonacci retrace. Alright, pretty standardized. And what became interesting in programming is when I first came out with this, you could have a static high and then project your 23% and so on and so forth higher. But this became interesting because it kind of reflected changes in trend, and you could literally follow rising or falling values in your Fibonacci. And so if we shrink it all down, and you can see plateauing, and then all of a sudden a little bit of a dip, but then it started rising. And so in that rising bottoms you have rising price, and in falling tops you have declining price. Now let's go to the input section because that becomes important to really get a gauge. So we go format, and here we have this long list. Oh my goodness, so many different inputs. I'm going to change several of these real quick to get rid of those extra lines, and I will explain those as we get to the close of trading, but the reality was I wanted to do this. Didn't make any difference that it was live market time or closed market time. It was just about showing an opportunity to see how it is. Okay, so here you're just the standard. Now, made it flexible enough to where from the inputs you can change how far back your high goes. So in this case, let's just say last 22 days, 1 month. But let's say we only want to do 8 days for the low. Well, let's see what that does to our Fibonacci. And you can see how it compresses it quite a bit. Let's expand out to the most recent time period. Alright, so you can see that the 0 mark now has moved all the way up to what would have been, let's count them back, 1, 2, 3, 4, 5, 6, 7, 8. So it should match, well, the low would be this one right here then, yeah. Because it's lower than this 8th one going back, and that's how that works. And obviously the high is where we're at right now, so that's really going to be less important because it's going to stay the same. So we leave it back at that 53. There's about 22 day periods. Let's see if we make this 22 days. So that would be the current high plus the low from a month ago. And we can compare and say, okay, is that a month ago for our low? We'd have to scroll back 22 days, which, depending on the month, is about the average. So that would mean right about here is the low. Alright, and so that gives you your 0%. Now you can take these lines and get rid of them. I thought about changing it so you could have the values on the sides, but this is just as easy. And if you don't like seeing those, and maybe you don't like all these lines, maybe you just don't, need any of them, you can turn any line off by just putting false in the category, and you can turn off any text. Say it's just too busy having the 38%, you don't need it, fine, we'll get rid of it. Say you don't need the 76%, fine, we'll get rid of it. You do have to spell it correctly. If you're going to say false, it's got to be correct. Alright, so you see, it just deleted those numbers off the side. Just that simple. It's just fairly intuitive. I mean, nothing, dramatic about it. Where it gets interesting, and this was basically going off of some studies in relation to, and you'll often hear about this, the S&P, as well as most markets, are mean reverting, meaning that they look, if they go one direction too far outside of, a standard deviation, they revert back into it. Okay, fine. So the concept behind that was to then say, okay, if we reached a point where we breached those deviations, then we could have trend change, and would that then be more meaningful? So that's where we added in, and down at the bottom here, we can take a look at them. These little mean situations here. So we have a mean high, a split mean, as well as the closed mean, and these are all mean averages that directly relate to price. So this was back before I completely eliminated price from the calculations. It doesn't change the value of Fibonacci setups. What I always became interested was, it's like you hear so many people talk about them, I wanted to know, okay, well, what are the real probabilities related to Fibonacci's and their retracements? Let me go back to 53 so that we have an equal, kind of a spread out Fibonacci sequence here. So here, where you begin to see, if we put the highlight in there, you can see down at the bottom it says mean high, mean C for close, mean low plus, which is the bottom one, and then a minus low in the gray kind of setup here. So you have the one down here that will cover you if you have price down at the bottom. You have a higher version of it up here at the top point. So fine. What you're looking for will be breaks or crossovers of this, and we would have to go back into time to find these kinds of breakdowns. Let me squeeze price a little bit. It'll be a little easier to see it right there. And you can see the stair-stepping of these means. And effectively, after I began working with it, to me it seemed more appropriate as, like the ABM, a stop. Because it kind of gives you an idea in between some of the ranges when you're making new highs. Let me get rid of that MBI ticker on here. It's kind of annoying. There we pause that. That will make that a little cleaner. So what you can do is you can start to see that there are points where these will cross over, both from a buy standpoint when the market, now obviously the market in this continuation up isn't going to give you as much information as if we moved into something like this, say a choppy period. And what I began to look for was to say, okay, fine, if I was going to do this as a trend model, if I'm above 50%, then ideally that would be a green trend. Well, yeah, no, because that you would miss from 0 to that 50% wall. And if you then pick just 23%, well, a lot of times those, would break down into new lows. What I was able to determine, though, is that if you did break down into a new low and moved up from there, you were likely to retrace that low and come back and revisit it. So that becomes an interesting probability. Like right here, where you made a new low, boom, price came back up, and boom, broke down below that particular setup, then took off from there. So this is where this bottom white line became very interesting, and being above it became much stronger buy signal. So just, and it's another one to add to the arsenal. It's also interesting because you always hear people talking about the Fibonacci's, and the reality is when you start to look at some of these setups, I mean, if we changed the high periods and that to reflect at the time that these are taking place, it's not very good. The reality is, I mean, you get these breaks below, they come near these other points, not quite, sort of hit it, and then it becomes one of these where they're trying to make the Fibonacci fit what's going on. And so then you'll see people say, okay, well, now I'm moving out to a 244-minute chart, I'm moving into a weekly chart, some other kind of machination. And believe me, I was wanted to be a strong proponent. It made sense. Fibonacci, these are mathematical, blah, blah, blah. The problem was there's no justifiable probability that any one of these retraces does better than another, and or that you're going to be above, other than flipping a coin. And it's sad, it's unfortunate. It causes a lot of people to want to turn off and say, no, he doesn't know what he's talking about. But they don't test it. They just see times where it happens in their favor and ignore times where it doesn't happen in their favor. And then you'll see others where it'll just have an up and a down. And, I wanted it to be something more than it was, and I couldn't get it to be there. Now, does that mean that we can't now take something like this where we have a power Mo and say, okay, if we break the Fibonacci at the 50%, what's my likelihood of going back over there if I'm also oversold in a situation like this? So other dips, 50% right here, oh yeah, I'm below 0, and boom. Now, that becomes very interesting to me. Now, some people will say, okay, yeah, I do the same thing with Fibonacci and, using stochastics or something like that. You could do that, you could try it. The problem you're going to get is you have to leave these massive rooms for drawdowns. And this is where, a lot of what you see on people say, oh, you just have to stick with something. Well, yeah, that doesn't work so well if things start to break down in an environment like this. Yeah, you can be a little more aggressive like that because nothing about it that says crisis, but you don't know when that next crisis is going to be, and you can't be leaving yourself with stops that are just unlimited. And I see plenty of posts from people who are like, oh yeah, I'm just going to buy Apple blindly and I'm not going to have any stop whatsoever and just go with it. Yeah, no, that's not going to work. I do need to do one thing real quick. Save that workspace. So you can look at these now from an input standpoint as well. All you're going to be able to change when it comes to formatting the setup will be the distance back that you're looking. You wouldn't want to touch anything with your strengths or whatever, and if you want to turn off the text, that's fine. You can leave these on or off. As far as the mean testing, what's going to be more effective is when we have the actual strategy that will correspond to it, because then we'll be able to say, okay, when we move down to 61 or 76%, and again, some people said, well, does it matter which direction this is? No, it doesn't make any difference. I could have 0 up here, 100 down here. The 76, 23% are still going to be the same lines. It's the same number, it's just flipped over. And so we match those colors accordingly. You know what, that 61% should be yellow. Alright, I'm going to have to change that. I mean, not that it's critical, but I wanted to keep color coordination between the matching ones. 38 should match the 61, and those should be the same color going through there. So I will alter that. Now it is interesting. We're looking at that daily chart, and if you are, hyper bullish, not bad. I mean, when you think about it, the rollover here drop off now should lead to a significant market retrace, and if it doesn't, then it's likely to get out of overbought and move down into an oversold. But that's for a different time. But interesting to see that nonetheless. And you're getting to a point where these means are moving to points that just can't be sustained. And this is where some of these things become interesting for just looking at historical behavior of mean reverting markets like this, and that when price dips below it, it tends to stay below there for a little while, and you look to your next retrace level, which happens to be that lovely cyan. In fact, we should scroll over. What is that? 76. So the value right there would show up on the side. 1477, I believe. Is that the 76% is at 14. I gotta be in the right spot here. Oh, come on, it's not cooperating. Oh, that's because we're about to have a bell, and the activity skyrockets for the algorithms right as we get to the close. And with just a couple of seconds left, we got 19 seconds. Well, by the time you hear that, it's going to be close to less than 10 seconds. So the bell will be going off in a few seconds here. Let's let it happen. Might as well turn up the volume. Ding, 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 ding. Alright, so the market's now closed. At least the regular market is. But anyway, you will see the different numbers appear on the sides for the retrace values. So that becomes interesting from that standpoint. And 1477 then would be what you would expect from a typical retrace on a move below there. But it is interesting. See, if you follow this white mean, you'll notice how today's low actually ended up right on that mean. So the low is 14.99 and the high mean was 14.99 and a quarter. So it's interesting because I think there's value in that. But now, when it comes to the adaptive model for trend, you're only going to notice a difference at this particular time if we move into, like I said, the tick charts, smaller time frames. And in this particular case, if we look at the adaptive setups here, -10, -1400, -18 is what the current reads are, and that's going to be effective when I move into also again. I'm still trying to get the stupid string on the plus and minus 1.618 to function properly in the strategy portion of it. Not making it easy on me, but that's okay. We're going to get it. It's just going to be an additional powerful tool because it certainly makes it easier. And in this particular case, when you look at your extreme histogram and then you can make your lower low on a higher extreme, that becomes attractive. Even when you had this sell-off and it was much higher, it would not cause you something to be, terrified of. And certainly allowed for a nice move to the upside. For those that want to, trade broader swings, it becomes just an extra advantage. Particularly like today's, where it started off early this morning, turned green from the adaptive standpoint, went all the way up. And when you get a red move like that, you just bring the stop up a little bit. That's all you have to do with that setup. And stayed green for a little longer, but then it finished right back at the same spot with the red. But we got that nice little buy setup that came through, and then the trend turned green after bouncing around for a while on a 10,000 tick here. And you can play with those numbers, and it's nice to do this kind of setup where you have two charts, one holding the original, one with the new, and you can then kind of adjust the number. And it's going to be different for stocks too, because as you can see, let me click right over it, because the names pretty much indicate this is the white, magenta, the green, a white above and sub values for the magenta, You can move those into negatives or positives depending on if you're looking for even more extreme oversold setups, or you want to limit them. Also, you can limit turning green based on what the shakeout value is, because again, if you're looking at a tiny time frame, maybe oversold is at negative, 26 average for some of them, and so you might need a little bit broader room on the shakeout value to be a little bit lower. So those kind of flexibility things just give you a little bit more of an idea, but I just thought I'd point that one out when it comes to the adaptive trend. You're only going to notice it for intraday, particularly at this time, as long as the market is doing what it's doing. But very shortly, you're also going to have the downside of that, where we'll be turning red earlier. So you'll end up getting green sooner, but you'll also turn red quicker. So keep on an eye out for that as I continue to progress with those. But the Fibonacci thing can be kind of fun, particularly if you're looking at daily charts. You just want to have an idea of where stock is retraced to, whether or not you're looking at it at a retracement point based on normal. And so, it's like this. If I looked at this particular one, I could say, okay, if I look at that bottom there, and if I look at the highest high, from this particular point, you could redraw a new Fibonacci and see where that overall retrace happened. But at that time, that's where it was, and it started to rise ever since as new highs have been made. So it kind of gives you a historical value. So hopefully that helps. As always, though, probably don't. Well, I'll put this one on YouTube as a live event. I won't have a special category until I do a complete one that has the strategy connected to the Fibonacci, and then I'll do one for YouTube that is specifically for the Fibonacci retrace or the adaptive. Any other questions? Anyone need me to go over anything? I know there's only a couple of you left, but now's an opportunity. If you're thinking about tomorrow, I'll give you a couple minutes and plop up a couple of charts if you want to see them. Let's see, Caterpillar. Not sure what. What do you want to see? This one's Caterpillar. I was talking about it from a short stamp. Wow, that's interesting. So it just closed, and you literally watched that one put up a green dot buy right as it was doing that. Now I'm watching right here, ERH coming over there, but look at it. It's been trailing off, getting away from overbought. So that's interesting from a Caterpillar stance. You want to look at Netflix and PCLN. Sure, we got those handy actually. So Netflix daily, and PCLN is right next to it. Alright, so it maintained extreme overbought. We were looking for right around this single retrace from the magenta because it was so done, but what I need to do, and I want to add it back in here, to show overbought, it's not something that I like to put on for regular viewers because it adds a little bit of complexity to the overall situation. But yellow and blue lines, I mean, if we scroll back a little bit here, you'll see these yellow and blue lines, and when magenta moves over either the yellow or the blue that are higher, you reached an overbought condition, and we look for crossovers below that. HLF, sure, I could put that one up too. So in this particular case, you can see we got extreme over there, and then it crossed over to a sell. The thing was, it's never gone below it, and we actually dipped below it. So you get this cascade where you literally are seeing in front of you overbought conditions easing, even though it's staying what some people would still consider to be extremely overbought, would not retire from that, and then crossed over, well, this morning, first thing, and boom. And you can see that from the orange, never relenting through all of this uptrend, just beautiful uptrend overall for Netflix. Nothing's very, and this is why it was very easy looking at Netflix from a earnings standpoint. Unlike some of them that have just been, this one was very clear, and I even pointed out after we had the giant move, the continuation on Netflix was pretty clear based on the previous chaos event as it happened. We were looking at it when it first broke out. PCLN, and then I'll do HLF. PCLN, lots of buy signals. It's not oversold. It had been overbought. Got a little bit below there. It's kind of consolidated. Gave a little bit of a buy signal just a couple of days back, and it's within that one now. And it's still got rising shakeout readings. So I would expect an attempt back towards the highs there. This most recent orange dot, 710.48 for an upside. I know, and from it being at 694, is that where it closed? 694. That's a pretty decent up target. So originally it gave us a buy at 685 with that plus 700. What was the target then? 704. Did it reach 704? Oh yeah, it did hit that target. Oh, okay. Go figure. What are you gonna do? Alright, HLF. Let's type that symbol in. I don't have that on my regular list. You're welcome. That could be a good play. You can go back and tell everybody that you're a genius, you're picking PCLN to go higher, and they're going to be like, what? How did you know that? Alright, HLF, still, this unfortunate with this because, we waited for it to get it oversold. Even though we had the buy signals, we wanted to trail this one lower. We wanted to be in around that 34.80 is what I was kind of looking at from a discount perspective, but puts it on a whole other series. What I would have liked to have seen, and this is another good one to pay attention to. Yeah, good luck with that. I find that when people have a set way of doing things, they're not interested in learning anything new. And we saw that today with some of the StockTwit comments from people who just not receptive to new ideas, and that's fine. Everyone's got that way. But what I was going to say is I like to see on my power mo, and this is something to look for in the future, when you get a signal, you want to see that white line move strongly above the zero line here, sort of like back here when it first crossed over for a trigger signal and began to rise. It's tended to do that slowly, but we would really need to see an explosion of the magenta back over zero, as well as maintaining that with the white. Did get an improvement from our shakeout. I would just say it's kind of tepid, so I would not be, frothing at the mouth to jump in. I would be reasonable with a move into it, but still looks good. And that upside target from this most recent setup is 39.19 for the orange, extreme fractal 39.09. Cyan was what, 37? But the 39, and that's pretty consistent with what the original one was right back here. But we wanted to trail it lower because we could still see that we were heading towards oversold and just hadn't gotten there. And then finally came down and dipped nicely below. And that's what we'd love to look for, those kind of setups where we got a clear range and then boom, you can look for your pop. So any others real quick while I've got, if you haven't signed in, better hurry up. We should look at Apple real fast while I'm here. It had tepid signals from Apple. Particularly intraday was kind of modest. We pointed out a couple of them from a 15-minute chart, but if we look at this from a daily, it's always good to look at it from a really, look at that downtrend, is beautiful. You can see each time it's gotten overbought on the extreme histogram, and here's the problem. You get this tiny little rise in Apple that everyone's gotten excited about, but we're almost getting overbought already here on this tiny move. That's not good. That's not really that good. Yes, we got oversold, and this is where I talk about pops. Some people were saying, oh no, I've got all these lower targets. You can have all those lower targets now, that's not a problem. But we're going to see when there are little teeny buy signals to take advantage of. They're going to pop up on the power momentum right here. Now, to me what's interesting was the trail of both the yellow and the orange down below the negative highway here. Because once we dip below that line, if both of them come in context, that's what we want to watch, is the first reverberation backward. What I want to see is the orange get ahead of the yellow, and as you can see from this chart, alright, there has never been a change in the overall trend of Apple going back here with the yellow above all the way. We had one flip. I think it was right over here, right when it first signaled. And this was back when it signaled the ratio psi, which looks for pretty deep moves. And so pretty ugly overall. Yes, you've got a tiny bit of hope with the little setup, but look at this shakeout, negative 24. I always tell people it's like you've got to be inside that negative 12 to have anything kind of sustained. This is just what you could literally refer to as dead count bounce, literally. And that would be an apropos description of what you're seeing there. Interesting with the SPY putting in multiple orange dots. I'm going to show that one too. We had the dailies of let's see where it is. Okay, here is the most recent MBI Opus setups that traded for the year. So at the beginning of the year right here, 2 signals there with winners, 2 signals here with winners. I'll go ahead and give you the stats on it, might as well put it up. So it's the performance report. This goes back to 2003. And we're not at new equity highs. We've had a little bit of an improvement off of the most recent dip. And it's actually been one of the more sizable dips. Last time it dipped that much was, 2007. And that was off this crazy decline right here where we were in that, well, actually we waited because we expected a little bit of a sell-off. But needless to say, always good to look at that broader picture. And orange dots coming in 152 for SPY target, and 152. So we're 151, so that's plus 10-ish. And that's consistent with where we were looking right around the 15 and a quarter for the S&P index overall. So nothing shocking with that. Let me see, I've got the little signal here. We can put Amazon in here. I haven't looked at Amazon in a couple of, well, actually I looked at it a little bit earlier. And what I was noticing about it is I didn't like it from a buy standpoint because we've been cascading on the PowerMo, and I just want it to be oversold. I'm just not interesting. Who is Caboner? I don't know. Oh, your mother. That was funny. Hey, you can make up any name you want. It makes no difference. That's funny. I didn't even notice that at first. We got the buy crossover right here, but it's in this trailing. It's in this trailing setup here, and we're not at the red line. The red line is you're oversold, so you're getting this signal within what I would say neutral. So to me, it's more of a consolidation kind of setup, particularly since I'm near overbought. Minus 12, you're right at the point of saying, okay, minus 8, I'm not interested. So at minus 12, how much more interested am I? Marginally interested. I still think it can pop. What I'd be more interested in here is now if we're getting a tailing off. We went from 8 here to 6 3/4 on the magenta, so the rate of descent is declining, and what I want to see, like now I've got the white below, so my next little tip, and this is where I then would say, okay, fine, the daily's not clear, so let's turn to a 78-minute chart, because that makes more sense. Okay, am I seeing divergence where I'm dipping below the red line, still below the red line. Yeah, it's oversold there. I don't even have an increase in no shakeout improvement yet. So no, you just have to wait. Sorry, it's not good. It's not horrible, just not good. Facebook, we were talking about that one. Buy signals. Facebook people, everyone was complaining when I was saying 28.80 for the buy, and we'd gotten oversold. We're looking for this. Now I got that crossover back above 0. See, we're at 240 for the white. So these are things to pay attention to when you see my charts go up. you want to look at those numbers. Okay. What we want to see now is a turnaround from this negative reading on the magenta to also moving positive, and you begin to start one of these setups. When people, told me back at 19 that I was nuts for wanting to buy this thing right back here on this cross when we were so deep, and boom, look what happened then. And this is how some people call it, bragging, boasting, or whatever. It's not. It's just the numbers. It's as though I have any control over what the numbers do. No, I don't. I can just report them to you. That's what I should call myself, a reporter. I'm here to report, not to predict. To report what is already done. Okay, what's already done. People are saying the Baidu run from is going to $50, whatever. I mean, what's an MBI today? What is an MBI projecting? Not bad. Somewhere a little over, back over 100 plus. Well, and we have 177 for the target. It's actually 174 for the target. Can't always get those exactly on the marker. And unfortunately, still declining there. Maybe in a little more chop. I'd like to see the extreme histogram get over the red line, but you can see that it's going to turn around for a pop there. And not horrible, negative 15. One move back to the upside, you're going to be inside negative 12. I'm not writing any hyper obituary for Baidu at this particular point, not with those numbers. Walters Industry, Walter Energy actually. Yeah, we liked it off the MBI before. We got a discount. We were expecting it because of the Chaos event. I loved it when the GAM came in there. And did we get a crossover buy? Yeah, 172 over 27. And you got a Catfish and an Extreme Fractal buy setup all at the same time. We got it at 36.50. I was suggesting that we could get back in at 36.50 if it popped up to the right side with the right signal. So got us right back to where we expected to be. CMG, people were having a hard time with this one. Some people were a little ridiculous. We had short signal pretty much with the sell. Turned around, gave green dot, didn't really get to the target. Dipped down here, people were crying, and then right when it dipped down there, it gave a buy signal. Another green dot from that particular setup. So we had a 318 target. So what that was, 318 and a quarter. This one ended up being a little bit lower, so it blew past the 318, and unfortunately at this particular point it blows past it and then puts in a red dot short. So would I be taking my gains if I had options or whatever on this thing? Yeah. Sure, it can continue with a little bit more momentum, but it's going to get overbought really fast. In fact, we're already overbought because you got a positive, well, negative 5 on that differential. Yeah, not horrible. But still, if you're taking yourself with a nice $18 gain, at some point logic has to prevail, I would hope. But it was nice to have those for everybody. American Express, we had a buy that reached our targets on that one. I think I put in another buy in the red trend, dipped down, and then shot up. And did it get all the way to those targets? I don't think it reached that. It was 60.93. What was the high before? 60.90. Yeah, 3 pennies. I'm not that crazy that if I don't get, particularly when I'm looking to see, this is the difference between having the indicators at your disposal. Alright, if I'm seeing that I'm green, positive, extreme, well, nearly added, 0, am I going to fight myself over a couple of pennies? Probably not. It just becomes a common sense sort of practical thing. It hit all the other targets before, so that was no issue even going back to that one over there. So from that standpoint, fine. Could you have taken the buy signal from the lower move? Yeah, it wasn't overbought, and you weren't getting a sell crossover. What was concerning me, though, is to start the day here, you ended up with yellow moving over the orange from a trend, and we're starting to see that. Oh, yeah, I have the BBRY. I put that one up a little earlier. Oh, that's too funny. Alright, so here's what I put up for, we had, well, I looked at this myself a couple of days back when it started to make a dip and everyone was claiming that it was going to end. We had this kind of chaos event, fine for that, looked for a little bit lower, and it put in a buy signal right here at 1490, gave a 16, was it 1669 was the target? 1666 was the upside target. You know, and again, this is where you get a lot of people who always say, well, man, I'm going to ride the thing to 35. It's like, come on, really? These guys target a specific ATR. They're not that, well, I mean, I wouldn't say they're not greedy because I think some of the moves are pretty significant. And they're doing it on a regular basis. But look at it, same players, you see. And this is interesting when you see stocks that have the same, I mean, it's extreme fractal, extreme fractal. It just happens to repeat. It seems like for cat, it's the orange dot, and it's just different definable individuals. I don't know if that's why they're just trading specific types of securities, or it's just the pattern is repeated within those securities, and therefore that's why we're seeing it. Either way, does it make any difference? Do we care? No. We don't give a rat's behind as to why it is what it is. It just, we recognize it, we can define it, we can see it, therefore it's foolish not to trade it, in my book. That's just mine. People have different views. Speaking of different views, I don't know what other view you want than this. Simple buy signals, and this is where the other one is. I say, okay, fine. You want to hold on to it. You think it's going to, the moon and back. Great. Put on the ABM. It's available to everyone who's got the indicators, and just trail it. Okay. So last time we looked at this one, I have that target right there. Well, trailing this thing, you'd be now all the way up here to 37.80. I can't quite match that for a stop. Okay, so even if you bought it full price at the entry's 35, you were crying because it dipped down to 34.70. But easy setup. It actually gave the buy right here on the red trend setup right there at 34.84, and if you took the discount, you would have gotten about 74. Dipped down maybe 10-15 cents against you, and has been nothing but a winner ever since. But some people have a hard time trading these. Now, they're going to have a hard time, and it's going to start getting interesting as we get into some sell setups. So that's when things are going to get ugly for people, because they're not going to know what to do when we start getting into the chop right before a breakdown of the overall market. Are we there yet? Not quite. But I don't think that outside of this month, I think within the month it happens. So there you have it. I'm going to take off because I'm going to get ready for the report for later. And as always, trade well.